Kalbe, a pharma giant amidst COVID-19? Will it stand or will it tumble? On the last close of 1345 rupiahs as of mid-June 2021, we issue a buy recommendation of 1780 rupiahs target price with a 32% upside. We're Mada Capital and we will present the rest of our investment research on Kalbe Pharma. Overall, Kalbe faces a favorable situation for its business. In the first quarter of FY21, Kalbe scored a strong result in net profit of 715.6 billion rupiahs, an increase of 7.1% year-on-year. The company optimistically projected an increase of 5 to 6% in sales in FY21. And we found there are some catalysts that are going to precipitate the share price of the company. The first one is Kalbe being the gotong royong vaccine distributor, and the second one is development of COVID-19 DNA-based vaccine GX99 and GX17 COVID-19 drugs. Kalbe stock price increased by 1.89% from 1320 rupiahs on July 9. The stock rose to 1345 rupiahs today, and among its peers, the stock had the best dividend. Net foreign bond inflows totaled $1.1 billion and rupiah gained 1.7% versus the US dollar in the second quarter ended May 17. And from the analyst point of view, the consensus rating is 4.7, which signals a strong buy.
Kalbe was founded in 1966 and right now they are one of the major paramedical firms in Indonesia. Kalbe has evolved and developed into integrated healthcare solutions provider through 4 business centers. The biggest supplier is the Philips. Philips delivered integrated solutions by leveraging sophisticated technology and extensive clinical and consumer insights. Meanwhile, PT Encefal has grown to become a general distributor. Kalbe launched new product, Habit Plus and Flavir. Meanwhile, KGBO is currently the parent company of Inogen Kalbiotech and holds a controlling stake in the Kalbio Global Medica.
Now we have the economic outlook. IMF predicted the global economy will rise at 6% in 2021 before slowing to 4.4% in 2022. For Indonesia, the IMF projected a 4.3% increase and an acceleration next year with 5.8% decrease. From the graph, we can see that Indonesia's inflation looks to be on pace to meet Bank Indonesia's prediction of 2 to 4% this year. Indonesia's foreign exchange reserves remain substantial, allowing the central bank to continue intervening in the currency market to avoid bouts of rupiah selling pressure. Bank Indonesia also has the authority to acquire government bonds in secondary markets and, at least briefly during the epidemic, in primary auctions in order to safeguard the rupiah. Industry overview and competitive position. Over the next 5 years, annual revenue growth in the Southeast Asian pharmaceutical industry is expected to surpass 11%. Southeast Asia's pharmaceutical markets are changing as a result of aging populations. According to a global data survey, Indonesia's pharmaceutical industry is the largest in the ASEAN, with a market value of 141.6 billion rupiahs projected by 2021. Kalbe Pharma, Indonesia's largest local pharma, controls 15% of the Indonesian market. And from the Porter's analysis, we conclude that the industry is highly competitive, capital intensive for R&D, high-tech dependent, and it is a highly regulated industry, but the policy is loosening. There is an enormous development potential for Indonesian market and also export opportunities. Now we come to competitive comparison. Revenue increases significantly over the years, but slowly compared to its peers. Return on invested capital always decreases, but Kalbe Pharma provides higher dividends. We believe that the BOD decides to pay dividends because Kalbe Pharma has a great financial structure, although the market is dissatisfactory.
The company announced Q1 results largely in line with previous guidance and market expectation. This year, they serve attractive dividends for investors because of their resiliency capital structures. Kalbe has higher margin than almost any pharmaceutical company of its size. Greater R&D spending as the company developed COVID-19 DNA-based vaccines GX99 and COVID-19 drug GX17. The Altman Z-score is great but slowly sinking, and the source of capital is almost all from reinvested earning. Meanwhile, the DuPont analysis looks well in this company. Kalbe has declined in FGF for some plans to boost their research spending starting from 2021 and beyond. The total count grows 5% for distribution and logistic division. The division productivity projected doubled due to the gotong royong vaccine distributor held by Indonesian government, while the R&D start out at 1% of revenue in 2020, but climbs up to 10% of the revenue by the end of the 5-year projection period to reflect higher spending on possible candidates to biologic via Kalbe Genection. Our target price is based on the combination of exit enterprise value per EBITDA for 5 years is 26.6 times. Our base case analysis with a discount rate of 13% based on WACC for the comparable public companies and a terminal perpetuity growth rate of 2% produce an implied share price of 1,780 rupiah. Since all of these companies generate revenue and most are profitable and cash flow positive, we do not view revenue multiples as meaningful. We also place less weight on P/E multiples given the high amount of non-recurring charges, the wide variance of in effective tax rates, and so on. The median for year 21 EV per EBITDA multiples in currently 21.8 times with a median 15.1 multiple for year 2022. Given that Kalbe's revenue growth, EBITDA growth, and EBITDA margin all exceed the median metric of those for the comparable public companies, we think that EBITDA multiples more in line with at least the median of the set are justified. Terminal value for long-term perpetuity growth rate of 2% or alternatively a terminal EBITDA multiple of 12.0 times. Mid-year convention use an FCF from Q1 stub period was subtracted from all calculation with this assumption and the free cash flow projection above. The discounted cash flow produced the following output.
These are the greatest risks to our investment thesis. First, we have market risk. Most of the raw materials for producing medicines are imported from abroad. Thus, Kalbe is subject to foreign exchange risk. Next, we have operational risk. Pharmaceutical industry supply chain is very complex, so Kalbe faces a significant supply chain risk. And the vaccine candidate will compete with well-established vaccines, thus the company is subject to new product risk. The third one is political risk. Kalbe is operating in several countries, thus the company needs to comply with each country's regulations and political situation. And now we have other company-specific and industry-specific risks.
Kalbe assures the quality of its business activities are in accordance with both national and international standards. Kalbe missions to improve health for a better life. The CSR activities. These activities are implemented in Indonesia, Nigeria, and South Africa. Environmentally, Kalbe's production facilities have met the national criteria for current good manufacturing standards, or GMS Indonesia. In social perspective, Kalbe built Taman Herbal Indonesia in Cikarang, which is dedicated to educating the community about herbal medicine. Meanwhile, a free health assessment and exam service is available at Kalcare in collaboration with the clickdoctor.com. Within the organizational structures, the board of commissioners consists of 7 members, 3 of whom are female and 3 of whom are independent commissioners. Meanwhile, the board of directors is made up of 6 members, none of whom are female directors and independent directors. It has been an honor to conduct this equity research for you. We thank you.